All right, traders, welcome back to this week's Trading Signal Breakdown, where we look at what's moving, what's worth holding, and where the smart money might be heading next. We've got 5 tokens on the list this week: Bitcoin, Ethereum, AIAT, CCO2, and Avalanche. So let's dive in. Starting with Bitcoin, the signal this week is hold or accumulate on dips. Bitcoin's had a wild ride, dropping sharply below the $100,000 mark after failing to hold key support around $109,000. Over $2 billion worth of leveraged positions were wiped out during the fall, marking one of the biggest liquidation days this quarter. But even with the dip, Bitcoin still looks structurally strong long-term. The $98,000 to $100,000 zone is the critical support area to watch, and if it holds, we could see a recovery toward $110,000 to $120,000 in the short term. If you'd bought $100 near the lows, that could grow to around $111 to $112 if BTC bounces back. So for now, Bitcoin is a hold, and adding small amounts on dips could pay off once the market stabilizes. Next up, Ethereum. The signal here is buy and accumulate with caution. ETH followed Bitcoin's correction, but has managed to hold above key support near $3,000. Institutional flows are softer this week, but on-chain activity remains steady, suggesting traders are still building positions rather than exiting. If ETH can stay above $3,000 and reclaim $4,000, a move toward $4,400 to $4,600 looks realistic. That would turn a $100 investment into roughly $150 to $165. Ethereum remains a buy for those with a medium-term view, especially during short pullbacks. Now let's move to AI Analysis Token, or AIAT. The signal is buy and swing hold. AIAT is holding its base near $0.36 after consolidating between $0.35 and $0.37 for several sessions. This kind of price action often precedes a breakout, and if AIAT pushes past 0.40, we could see short-term momentum toward 0.43 to 0.45. That's around a 20 to 30% potential upside, meaning your $100 investment could turn into $120 to $130. Volume is steady, sentiment around AI tokens is improving, and this looks like one of the more promising setups this week. Moving on to Carbon Capture Token, or CCO2. The signal is buy and medium-term hold. CCO2 is trading around $12 after a healthy pullback from its highs near $16. It's one of the few tokens with strong real-world utility, focusing on sustainability and carbon capture. That utility-driven demand gives it solid long-term potential even when the broader market wobbles. If momentum builds back up, CCO2 could test $13 to $14 over the next few weeks, offering roughly a 20 to 25% return. So if you put in $100, you might see it grow to around $120 to $125. This is a confident buy for anyone looking beyond the short-term volatility. Finally, Avalanche. The signal here is buy and short-term accumulate. AVAX has been resilient despite broader market weakness, trading near $15 to $20 after earlier highs above $145. If it can hold that base and reclaim $30 to $40, the next leg could target $46 to $48. That's a 20 to 25% move, turning $100 into around $120 to $125. Avalanche remains a steady performer thanks to consistent ecosystem development and growing DeFi activity. That's our trading signal update for the week. Stay sharp, stay disciplined, and see you in the next one.